Business Leadership South Africa this morning reported on its independent research undertaken by Intellidex on South Africa's persistently low rates of investment in infrastructure. The report draws out the reasons for declining investment levels over the past 5 years by both the public and the private sectors and recommends a wide set of interventions to improve investment rates towards the 30% target set by the National Development Plan. Well, for more on this, we speak now to Busi Mavuso. She's the CEO at BLSA. Thanks very much, Busi, for joining us. So for many years, a lack of business confidence has been cited as one of the key reasons for a lack of serious investment in infrastructure. What does the latest research ascribe to the decline?
Thank you very much for the invitation. So I think the research really sought to highlight why, even after there is so much focus, on infrastructure investment, why are we not making shifts, in terms of trying to get infrastructure investment into the country? And you would remember that the president has actually made it his focus so much so that he employed investment envoys to try and get investment into the country. So we're looking into why there are no shifts and what needs to be done. And when you look into the reason why, really, it highlights some of the things that we've been talking about as a country. It really highlights the fact that you've got fiscal constraints. Remember the last bout of investment that we had in the country, which was post the global economic crisis in 2008, which saw, the Medupi being built, the Kusile being built, the locomotives being bought, and so forth and so forth. That was actually driven by government expenditure, from the fiscus. It was also driven by SOE, investment. But when you're looking at the situation now, you see that the government finances and the SOE finances have actually deteriorated over time. We're sitting in an environment now where we could actually be facing a fiscal debt crisis in the next 2 to 3 years. And I think because of that infrastructure investment that happened in 2008, it opened up the door for corruption, and it opened up the door for hollowing out of the SOEs, and it obviously opened up the door for actually the state capture project, which therefore meant it left our economy decimated. So as we try to revive our economy again post the COVID crisis, and it is not even a post-COVID crisis issue, because when Cyril Ramaphosa came into office in 2017, he already focused on infrastructure. But I guess at the time, as you are saying, the business confidence was not there because of the state capture project, but the government finances had also deteriorated to such an extent that we are not in a position to can actually spend on investment. So it therefore leaves two other mechanisms, which is the PPPs and the private sector investment, to actually drive the infrastructure investment. And when looking at the PPPs, you therefore see the regulatory rigidity, that actually exists. If you look at how many PPPs have actually been done in the country ever since the PPP unit has been set up in Treasury 10 years ago, you will see that we've only done 36 PPPs. I would have thought that if I was government, I would look into the reason as to why so few PPPs have been done and look at what are some of the constraints that are actually impeding the PPPs from happening. And I think we haven't had a single PPP registered in the PPP unit since 2007. So the constraints from a regulatory perspective, from a PFMA perspective, are a big impediment in as far as the PPPs are concerned. And the private sector investment is not happening. It's actually only 2% in the country at the moment. And the reason why it's not happening is because the private sector is not confident that there is enough demand, in the country for them to spend so much money in infrastructure. And I think it therefore dissuades, investors. And I think the issue of demand is evident on the unemployment numbers that we have in the country. It therefore means if you have 41% of your population that is unemployed, where you have more people that are unemployed than those that are employed in all the provinces except Gauteng and the Western Cape, it means people don't have disposable income. So does it really make sense for me as a business to continue spending in infrastructure when I know that I'm not going to get the desired returns because people in the country just don't have the disposable income to can spend, so that I can be able to get the returns. Yeah. So those are some of the constraints that have actually been highlighted by the report.
Busi, let me come in there. So the government has set up the infrastructure fund, which will get about 100 billion rand of public money. But the hope is that the private sector will also club in with finance and know-how, which speaks to the PPP that you're talking about, the public-private partnerships. Does that tally with some of the recommendations that have come out of the latest report?
It definitely does, Nompumelelo. So from a solutions perspective, we are saying that if you just look at some of the policy frustrations, or the policy issues that the private sector has been raising for quite some time, you would see that by not resolving those policy issues, you are actually impeding a lot of infrastructure investment. The first one is really the issue that we've been raising around energy and electricity, to say that allow embedded generation, allow those companies that are in a position to self-generate to can actually do so. The regulation at the moment says that a self-generation can only happen up to 1 megawatt. We've been trying for many years as the private sector to get government to lift the license exemption to 10 megawatts. Already rated, Eskom said 10 megawatts is not enough, push it up to 50 megawatts. And there are discussions at the moment to even push it up to 250 megawatts. So the private sector is saying we are ready and willing to actually, generate our own electricity. And that would mean that we are going to have to set up infrastructure to do so. So as soon as the license exemption has actually been lifted to 50 megawatts or to 100 megawatts, you are therefore going to see an influx of investment with a lot of private sector companies that are actually going to start the infrastructure projects, because a lot of companies are actually tired, with the interruptions from the load shedding. The other one is the issue of the spectrum auctioning. As soon as the spectrum is auctioned, your MTN and your Vodacom and your Telkom are sitting ready and willing to actually ensure that they expand capacity so that they can be able to grow the 5G networks. And as soon as they expand capacity, there's an opportunity for investment that is actually going to take place, from an infrastructure perspective. The other one is the issue that the mines have actually been talking about. We've been talking for many years about changing the mining charter and actually ensuring that we finalize the MPRDA that has actually been left unconcluded and unfinalized, I think, for more than 10 years now. So as soon as the government concludes that, the DMRE concludes that, then there are a lot of companies and miners that are actually waiting to invest in the country as soon as they get clarity on the MPRDA and on the mining charter.
Yeah.
And of course, the other one is the issue of the Section 25 of the Constitution, in as far as the property rights are concerned. It will boost investor confidence and it will allow companies to invest in the country.
Let's hope all those gaps that you're talking about are filled sooner rather than later. Thank you very much, Busi, for your insights there. Busi Mavuso, she's the CEO at BLSA.